What if I told you that most crypto traders are losing money not because of the market, but because they're following the wrong strategies? In a world where prices swing wildly, bots dominate order books, and sentiment shifts overnight, the right crypto trading strategy could mean the difference between massive gains or devastating losses. And right now, in 2025, the rules of the game have changed. If you don't know what to do, you'll get wrecked. But if you stick around, I'm going to reveal the smartest strategies that top traders are using right now. And trust me, you'll want to hear this. Crypto is no longer a fringe playground for geeks and gamblers. It's now a trillion-dollar battlefield. We've seen Bitcoin cross $123,000, Ethereum evolving into a full-scale economic layer, and Solana and other altcoins rewriting the rules of speed and scalability. But with great opportunity comes great confusion. What strategies actually work in 2025? Day trading? Swing trading? AI-assisted bots? DeFi yield stacking? Or is hodling still king? It was the kind of morning that only crypto traders understand, where one eye is on the charts, and the other is still half asleep. Bitcoin had surged overnight, Ethereum followed close behind, and Twitter was a war zone of predictions. But under the surface of price pumps and clickbait tweets, something deeper was unfolding. Something that most retail traders would miss entirely. You see, the smartest traders in the game aren't just watching charts. They're studying sentiment, liquidity, and geopolitical tremors that ripple across financial markets like aftershocks from an earthquake. These traders, hedge fund quants, on-chain analysts, and even lone wolf retail tacticians, aren't guessing. They're strategizing. They're deploying systems. And right now, as the crypto market enters a new cycle of expansion, their strategies have never been more important to understand. Let's begin with momentum-based trading, often the bread and butter of the crypto elite. It's not just about buying what's going up, it's about timing entries with precision and exiting before the crowd catches up. Top traders use advanced metrics like relative strength index, RSI, MACD divergences, and volume flow indicators to identify where real momentum is building. They aren't lured by every pump. They're looking for consistency in volume, confirmation across multiple timeframes, and signs that whales are entering. Consider the recent Ethereum breakout. While the average investor jumped in when ETH hit $3,400, the pros were already long at $2,900. Why? Because the funding rate flipped positive, open interest surged without a matching spike in price, and L2 ecosystems began to move in tandem. The clues were there, buried in data that only a trained eye would notice. But then there's mean reversion trading, a more patient and statistical approach that thrives on volatility. In a market where things go up fast and crash even faster, the idea that price often returns to a mean, like a gravity pull, is profound. Institutional desks exploit this through algorithms that scan for extended deviations from 50-day or 200-day moving averages. They identify overextended coins, like when Solana spiked 40% in 2 days on social hype, and short them once the momentum fades. Or, conversely, they long strong fundamentals after a crash, like when Avalanche dipped 30% due to temporary fear around a token unlock, even though the fundamentals remained unchanged. But not all successful traders are glued to technical indicators. Some thrive with narrative-based trading, a strategy gaining serious traction in 2025. It's not just what's happening on the charts, it's why it's happening. Narratives drive liquidity in crypto more than any other market. Look at the AI narrative earlier this year. Tokens like Fetch.ai, Render, and Ocean exploded, not just because of utility, but because the broader AI sector was booming. Nvidia stock hit all-time highs, ChatGPT-6 launched, and retail piled in with FOMO. The top traders saw this coming. They tracked developer activity, partnerships, even GitHub commits. They didn't just buy tokens, they anticipated waves of investor attention. They rode the narrative from the start and exited while retail was still euphoric. And then there's on-chain strategy, a world of wallets, gas fees, and silent whale movements that the average trader never sees. Smart money watches addresses, not headlines. One massive Ethereum wallet receives millions in stablecoins? That's a signal. A dormant whale wallet activates after 3 years? Another signal. In 2025, on-chain analysis tools have become so advanced that they can track real-time flows from Binance to cold wallets, front-run smart contracts, or detect rug pulls before they happen. It's a data goldmine. Those who master it are no longer playing the same game as retail. They are code breakers, decrypting the blockchain's living pulse. Still, in a market driven as much by fear as greed, risk management might be the most underappreciated strategy of all. Even seasoned traders fall into traps, chasing green candles, ignoring macro signals, or overleveraging in a volatile environment. The best traders know that success isn't just about being right, it's about surviving the wrong calls. They use tight stop losses, predefined take profits, and position sizing based on account volatility. They don't FOMO into Pepe coins because of a tweet. They've built systems, rules they follow religiously. Because in crypto, one bad decision can erase months of gains. Right now, in mid-2025, the market is at a crossroads. Bitcoin is hovering around $123,000, and Ethereum is making headlines for its Shanghai 2.0 upgrade. But this isn't just another bull run, it's a maturation of the crypto landscape. Institutions are back, ETFs are launching globally, and governments are eyeing regulation with scalpel-like precision. The playground days are over. We're in the era of strategic warfare. But don't let that scare you, let it empower you. Because never before have retail traders had so many tools. From decentralized perpetuals like GMX or DYDX, to real-time trading bots that plug into TradingView, to on-chain scanners that alert you when smart contracts receive sudden inflows. This is the golden age of informed trading. Still, even with all this technology, discipline reigns supreme. It's not just about the tools, it's how you use them. The best traders don't let emotions drive them. They let data guide them, intuition sharpened by experience lead them, and above all, they stay humble in the face of a market that punishes arrogance. And here's something most won't tell you. Even top traders lose. Often, but their losses are small, controlled. They don't bet the house. They don't revenge trade. And when the moment is right, when the stars align, and all systems flash green, they go in, not with hesitation, but with surgical precision. So, what should you do now? Start by understanding your risk profile. Are you a momentum chaser or a data analyst? Can you sit in a trade for weeks, or do you thrive on scalps and 5-minute charts? There's no right answer, only what works for you. But no matter the path, study the market. Learn its language, watch the flows, read the news, then question it. Build a strategy and backtest it. And above all, learn from every mistake without shame. Because in crypto, knowledge compounds faster than capital, and every candle that moves is a story, a clue, a lesson. This is the new world. It's wild, unpredictable, and full of traps. But for those who master its rhythms, it's also the greatest financial opportunity of our lifetime. In the latest news, Bitcoin ETFs are finally seeing consistent inflows again. Over $5 billion just in the last 3 weeks. BlackRock's tokenized fund pilot on Ethereum's base layer is live, and Deutsche Bank just launched crypto custody services. These are seismic shifts that validate this market isn't going anywhere. But it also means you're not just competing with fellow retail traders anymore. You're up against machines, funds, and pros. That's why you need every edge you can get. So, are you still trading the old way? Or are you ready to evolve? The strategies I just shared aren't theories. They're being used right now by the smartest players in the game. Thank you so much for spending your time with me today. I really appreciate you watching. If you found this useful, a like would be fantastic, and subscribing helps me keep creating content you'll hopefully enjoy. Please share your experiences and any questions in the comments. I always try to read and respond. Your support keeps this channel going. Until our next video, take care.